Oracle Corporation, ticker symbol ORCL, reported earnings and it is up 7% and even holding these gains right here despite the move up. Very, very positive momentum. And we're going to talk about why. Why is the stock rallying? What does it mean for your portfolio? Should you buy Oracle right now? And what does this mean for the AI trade? But before we dive in, if you could please like and subscribe, it really, really helps me out. Let's dive in. Now you can see why Oracle was real positive in the after hours, simply because they beat on the top line, beat on the bottom line, revenue growing 11% for the quarter, earnings per share growing 9%. And you can see right here that when you look at the overall metrics, very, very solid stuff. Net income grew from 3.1 to 3.4 billion. Net income margin remained largely flat. You can also see here that the free cash flow margin went from 22.9 to actually negative 2% in this quarter, but this was largely attributed to the huge amount of capital expenditures taking place at the moment, mostly to bolster up their cloud infrastructure and cloud software segment. So it's a good use of capital. So it's better to look at net income or EBITDA as a whole. We did see gross margins tick down ever so slightly, but the market kind of ignored that. It had to do with some one-time specific charges at the top line of their costs. And then their balance sheet, really ugly in my opinion. They have $109 billion of debt, a lot of debt, $17.8 billion of cash as a whole. And this quarter's earnings was pretty satisfactory. From here, we should see earnings growth rates and margins ramp up in a very, very significant way. Now, what exactly does Oracle do? And I'm going to go ahead and read this to you. Oracle designs, manufactures, and sells both software and hardware products and also offers services that complement them, such as financing, training, consulting, and hosting services. Many of the products have been added to Oracle's portfolios through acquisitions. In fact, I use one of Oracle's software products every single day. I work as an accountant. We use Oracle's Siebel software. Very, very powerful software. It's a CRM similar to Salesforce, but leagues above, and it's super, super good. Once implemented in our business, I don't think we're actually ever going to leave. And so, they do have extremely powerful software. They've started building out their cloud division, and this is what their segments look like, right? They have their cloud applications, which is their software. They have their cloud infrastructure, which is like their data center segment. They're complete with Microsoft Azure, Google Cloud, etc. And they also have their database systems, well known for its relational database management system, or the RDBMS. And they also have other services, financing, consulting, etc. And while I was doing research for this video, very, very interesting that Oracle initially was started at the CIA. Larry Ellison worked for the CIA. He was working on a project called Oracle. Then he actually left the CIA and started Oracle, the business. And that Oracle project, while we don't know what it is, it probably had to do with something related to relational database systems. Because of Larry Ellison's ties to the government, a huge amount of Oracle's revenue, even to this day, comes from government contracts. And I believe Larry Ellison himself has a security clearance. Very, very interesting. Now, looking at the overall financials, you can see revenue grew 11.3%, cost of revenue grew 12.4%, and coupled with an 11% increase in interest expense, that is how you get net income growing only 9% for this quarter. You can see interest expense is nearly $1 billion per quarter for Oracle, and that's because they have $109 billion of debt on their balance sheet. So a lot of debt, and that is actually growing as interest rates have ramped up in the last 12 to 18 months. Hopefully, if we do get rate cuts, their interest burden should lower. But I do think a lot of their debt is sort of like fixed long-term debt. So when you look at these earnings, right, a lot left to be desired. So why was the stock up 7% or 6.8% here in the after hours? Well, it actually had to do with the individual segments. You could see right here that RPO, or remaining performance obligations, essentially future revenue, is sitting at $138 billion. Now that grew 41% on a year-over-year basis. I think this is part of the big reason why the stock is moving in the after hours. You also saw here cloud revenue was up 27%. Cloud infrastructure revenue was up 52%. So, the cloud division really enabling growth in Oracle's business. You can see remaining performance obligations has actually shot up here in in the last 2 quarters, and that it has been on a steady increase since 2020. But ultimately, it really came down to future guidance. Now, Oracle doesn't really give guidance in the normal sense. They sort of just scatter it out in their earnings calls and in their press release. And I found 2 paragraphs right here, and we're going to go ahead and read. Financial year 2025 was a very good year, but we believe FY26 will be even better as our revenue growth rates will be dramatically higher. We expect our total cloud growth rate, application plus infrastructure, will increase from 24% to over 40% in financial year 2026. Cloud infrastructure growth rate is expected to increase from 50% to over 70% in 2026, and RPO is likely to grow more than 100%. So right now it's at 130 billion, so it's going to go to 260 billion thereabouts. That is their guidance. Oracle is well on its way to not only being the world's largest cloud application company, but also one of the world's largest cloud infrastructure companies as well. We currently have 23 multi-cloud data centers live, with 47 more being built over the next 12 months. So they're going to double their current capacity in a single year. We expect triple-digit multi-cloud revenue growth to continue in 2026. Revenue from Oracle Cloud customer data centers grew 104% year over year. We have 29 Oracle Cloud customer dedicated data centers live, with another 30 being built in 2026. Insane. Overall, Oracle Cloud infrastructure consumption grew 62% in Q4. We expect OCI consumption revenue to grow even faster in 2026. OCI revenue growth rates are skyrocketing. So is demand. So pretty much because of AI, cloud infrastructure is growing, cloud application is growing, and those 2 segments are Oracle's largest segments. They're growing. They're expected to accelerate in 2026, and that is why the stock is ripping. The street loves to hear this. So when you have like a double beat and essentially a raise on the overall guide, that is very, very positive, and that is why the stock is up 7%, and probably will go ahead and take out those all-time highs. But let's actually talk about a valuation. And look, the stock doesn't trade on an egregious valuation. You're looking at 24 times price to earnings for, a business that has segments growing 50, 60, 70% on a year-over-year basis, 16 times on an EV to EBITDA basis. The shareholder yield, not that great. But even though the shareholder yield isn't that great, that's because they decrease their buybacks to sort of fund a lot of their capital expenditure. But Oracle is a buyback machine. In the last 10 years, the company has bought back about 42% of its shares outstanding. And you can see here from like 2018 to 2020, when they weren't expending capital as heavy as they are right now, they were buying back like $5, $6, $7, $8 billion worth of shares every single quarter. And that is why, shares outstanding has decreased 42%. Now, they only repurchased about 150 million in the most recent quarter. So share buybacks have slowed to an absolute crawl, most likely just offsetting stock-based compensation. Now, looking at a valuation framework, what can we expect for Oracle with all of that? Now, we're going to plug in 0.5% of share buybacks every single year on $55 billion worth of revenue, growing to about $102 billion in 2029. Now, that's about 13% compounded growth. That's slightly below consensus. Consensus is calling for about 14.5%. So, I'm well below consensus, and then EBITDA margins of 41%. That is currently what it is. So we're looking at margins staying stable and the business just really growing very linearly. And I think as the company grows, it should build operating leverage. So you could see 43, 44% margins on a very bull case scenario. And that leaves us with EBITDA of 42 billion in 2029. And we're going to use an 18 multiple, which I think is conservative. I think you can actually go significantly higher than that, especially because this is the trailing 12-month multiple, right? The current multiple is 25. And then you get the enterprise value. Now, the big problem with Oracle is the amount of debt on their balance sheet. And just for context, right, if this figure right here was 0, if they had no net debt, so an equal amount of debt to cash, right, the compounded annual growth rate over 5 years would be 11%. But because they have net debt of $91 billion, which is so much, right, it really decreases the overall return. And that's what we do in this valuation model. We penalize companies with high amounts of debt. So then you get the equity value, divide by shares outstanding, and you get a stock price of $243 in 2029. The current price is $188 after the rally, and you're looking at about a 5.35% compounded annual growth rate over the next 5 years and a fair value of 138. Now, this multiple is conservative. I wouldn't be surprised if you could actually see 20 or use a 25. In that case, you'll be looking at 15% compounded annual growth rates from year above. I think Oracle probably is a buy right now, especially considering the wide moat nature of the business, but you would need to dive more into the fundamentals and the overall business to determine if it is the right spot for you. But, plainly looking at it like this, I would say that Oracle probably is not a buy right now. On the technical charts, Oracle has a history of respecting the 200-day moving average, as you can see right here. Here. We sort of just bounce off it, continue to move higher. We bounced off it right here. It's only when there's a fundamental change in the macro environment or policy shift that we will actually go ahead and break the 200-day, but Oracle has retaken it. We found sort of support again right here. Now, Oracle is up 7% in the after hours at the $190 range, but if the stock does pull back to its 200-day moving average, I would say that would be a good spot for a trade, especially considering the earnings we just got. I think this earnings should support the stock to go ahead and retake all-time highs in this quarter. And if we do pull back to this 200-day moving average, that's probably a great spot to go ahead, buy, and aim for those all-time highs. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.